Well, good morning, everybody. How's everybody doing out there? Good to see everybody this morning. So, we got some markets to look at. We're going to look at some broad market stuff today. I'll look at some equities. I'll look at some other broad market indicators. Good morning. What's up, Chris from Twitter here? Hey, Chris from Twitter. Sip of coffee there. I'm going to look at the 10-year, the correlation between the 10-year bond yield and Bitcoin. Gonna do some forward looking. Hey Gene, good morning. Let's see what we think we've got coming up here for crypto in 2022. You know, the big question in everybody's mind is are we entering a new paradigm? No more bull and bear markets, no more cycles, or are we going into a bear market now? Or, you know, there's lots of questions, and so we're going to try to find the answers this morning. But as usual, I'm not a licensed financial advisor, so anything you hear me talk about here today is just my opinion about what I see in the markets. This is not financial advice. If you were to take trades blindly based on anything you hear here, you're going to end up losing all your money and living in a van by the river. That said, Bitcoin's price action has been super unexciting. The volatility on this asset has dropped pretty dramatically since the sell-off on early December. It's now been exactly a month since this big this OI wipeout back early last month. So we've gone a whole lot of nowhere. We've been inside this one daily candle the entire time, easily inside that daily candle, not even sniffing the outer bands of that candle just yet. So what does that mean? What does it mean when you get low volatility for a period of time like this? Well, a lot of times it means that once the market decides on a decision, you will regain some of that volatility on a typically high, variance asset. You'll regain some of that volatility. So that's what we're looking for: is how long does the market decide to consolidate? How long do we decide to go sideways? Now, ultimately, if you think about it, we first put in the price that we're at today is 47,000 roughly. We'll just call it 47,000. Remember that Tesla candle when Tesla announced they were adding Bitcoin to their balance sheet? We got that big breakout on February 8th of last year, 2021. Now it's last year. And then the top of that candle came in right close to 47,000, almost exactly where we're at. So we have been sideways since Tesla announced that they were adding Bitcoin to their balance sheet, basically. And so otherwise, we've been pretty range bound. Now, if you go look at the monthly, I think, we've been from the February to the February candle has been like the majority of all the price action from the past year was confined within roughly the bounds of this February candle. Not exactly, but you look at that, we had as much volatility in the month of February as we've had. All these candles have closed pretty much except the October close and November open. They've closed mostly within the month of February. So, and this is just adding to the story of, you can see the volatility is slowing down. We had a lot of consolidation through here. Similar kind of story, right? This one candle was kind of the range for the majority of a lot of this price action. And these two candles together really was the range for all the rest of that price action. And then, these two candles here was pretty much the range for almost all of our price action. So you can see it can go sideways for a while. So the question is do we get this sort of sideways 2019 crabbiness for, a period of time longer? Or do we break out of this range? Do we finally break out of the high of that March candle there? That's all questions we're going to try our best to answer today. Good morning, Sonics. So what I want to look at here is my current Bitcoin chart. And obviously what I've got in like light watermarked in the background here for entertainment purposes, I took the fractal from the summer. Now this was Wyckoff accumulation pattern 1. Pretty clearly, right? This was the first pattern. And it actually followed more of this. This isn't a specific schematic of an accumulation. This is kind of a combination put together by this Twitter user here, Twitter handle. But we kind of followed this one actually fairly closely. If you see your traditional Wyckoff phase 1, so I don't have it pulled up, sorry, doesn't necessarily have these higher highs laid out exactly like this. It's a little bit of a lower high, but then you get this secondary spring shakeout. What I kind of wonder if the market's doing here as we kind of go sideways, you can see here the watermark, the one big variance I can see from the summer pattern is, again, the volatility was a little bit higher. You can see from, if I line up the sell-off almost exactly from the last impulse. Now what I did is I measured it by the first green daily candle and then the red candles, the big red candles that we had. And so that's what I did over here. I took actually this price from right here. This is the starting price on the 18th of May. So we already started the sell-off. This is that last little bounce before the capitulation move. So I lined that little fractal up. And this is not, I would not trade this. This is not something I'm trading, right? I'm doing this more for just analyzing the patterns behind the behavior and to try to better understand, what we could be looking for. See if there's any variance from that model, from that price action, I should say, really. And one thing I'm noticing, you see the wick lows. If I line up the wick lows exactly, now I've realigned this a little bit. Let me just go line that. See that wick right there on the left? I'm going to line that wick up pretty much perfectly. Okay. So the one big thing is the volatility is a little bit less. So we bounced back a little bit stronger, much stronger, concurrent sell-offs, longer bounce, sell-off. The trap was a little bit higher actually than this trap was. This trap was more prolonged. It lasted slightly longer, but it did not get as high. But these sell-offs here recently, the real significant thing to me is that this capitulation move that we had right here did not have the same volatility that these capitulation moves did over here, right? So the volatility is slowing down to the downside on this particular accumulation. Now, if you know anything about, if you've studied Wyckoff at all, I'm gonna, let me go back to this with respect to textbooks and study Wyckoff. Yeah, here you go. If you study Wyckoff, now I've done some light reading on it. I feel like my trading style matches pretty well to just being able to manage around Wyckoff patterns. What happens is, if you think about just from a very broad perspective here, I'm gonna put the 50-day on here. When you get a Wyckoff distribution, you trade well above most of the moving averages, right? You get pretty well detached from the moving averages, and price goes pretty far detached. And then when you are in accumulation, you drop below some major moving averages. It's really kind of just the pattern here. And so that plus just general stock patterns, like this was an ascending wedge here, and this was a descending wedge. So I don't necessarily analyze too terribly much the actual Wyckoff methodologies, because I feel like my more straightforward I'm very much a trend. I guess the technical term for it that people would use is a trend trader. I consider myself a momentum trader, and that I'm looking for multi-day, or multi-week momentum, and to be established, and then I buy into support as we validate, a kind of a longer trend. So it really is a trend trader, is what they call it, right? That's really what I am at the end of the day. But I do use higher fidelity, namely Heath at Trade Talk, his style of buying as support. So I wait for something to confirm support, a few pings of it, and generally before you get a big breakout, you get a little bit of range-bound price action right before you get a breakout one way or the other. And so I use that to dial in my entries and even further. But at the end of the day, I'm looking for larger momentum moves, and so for me, these larger Wyckoff patterns work out pretty well actually, because I can generally ride that trend up, and when I see the trend changing and we lose momentum, then I'm generally, apt to get out of that. So I haven't studied it too much, but I have done some reading, and I will tell you, the reason a lot of this stuff plays out is this is the market. This is whoever is trying to manipulate prices. Now remember, the market can push back against them, right? So they can be a really big player, but at some point, if other big fish are entering the market, they can mess with each other. So sometimes these patterns don't play out exactly like you would think. That's kind of very often. But what happens is, in the second half of this Wyckoff pattern, what's happening is they're selling. They're putting a lot of sell pressure to test where the bottom ranges are of this price, and if it's ready if the market is buying these up and the market is ready to chase price as they push price the other direction. So what they want is they want to validate there are buyers. There are strong buyers, and what they're gonna do is when they reverse strongly, they want then buyers to come in and chase price. And so they've done they pushed price down a couple of times. They've been testing, and they do give it a final push, and they accumulate pretty strongly right through here. And then they push the price back out, accumulate, and let the market push price back up this direction, and then they help the market reach some feverish peaks, and they sell into it, right? So these are tests by those who are attempting to manipulate the market. Now, what you see happening here is that the market is putting in a floor, and for one reason or another, this is the Wyckoff schematic too. And I'm not 100% certain if this schematic plays out more so because as these tests happen, there's just stronger support, which continues to confirm that the market's ready to push to the upside, or if it's purely manipulation that's causing it to not go down as much. But these tests over here, there was a lot more fear. So this sell-off, and you look, think about the catalyst for all this was China banning Bitcoin miners. That sent a lot of fear into the market. So there was a lot more hesitancy to put a support floor under this market. So that's very well likely describes why when they're testing to see what kind of buyers there are, it actually wicks down pretty strong because people are pretty reluctant to step in here in front of this train of China banning Bitcoin. Now that's pretty far behind us over here in 2022. So what's the negative news? There really isn't much other than Bitcoin hasn't done much for a year, right? That's the negative. It's Bitcoin hasn't done a whole lot. Is it rolling over? Is the market over? Blah 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 blah. So there's not the same catalyst for fear as there was over here. So for some reason, the market is putting in a much higher floor than you see it did over in the summertime. So that leads me to believe that if we're in an accumulation, this is not a given. This is something that we continue to monitor. We're somewhere transitioning from phase B to phase C on this Wyckoff schematic too, if we are, right? So what you can look for here is for us maybe to put in a little bounce that actually might mirror this bounce quite a bit, and then for us to retest these range lows, maybe even put in a nominally lower low over here. As you can see, this schematic might play out. So they'll try even harder here to make another leg down, and if the market continues to put in support above this test over here, you can see here, we're barely above these though. That's the other thing, the market did bounce and the secondary bounce a little bit higher. But we'll see if the market continues to want to put in a support just above this was like a ST in phase B. If you look at the price, I would say these two wicks, this one right here probably was it. So we'll see if we stay above that, or if we wick below it and get more of a spring look to it like this, right? So that would be the secondary test two. I think this was more secondary test two. Then you had your trap, and then now we're putting in this price action here. So we could still wick a little bit lower. Nonetheless, it appears to me like we're maybe 2/3 of the way now through an accumulation pattern, starting at the beginning of last month, and then now going through to, we're a month out, and the last time that we had this, this schematic, let's just measure that real fast. From I'm gonna call it from this point here. This is the last little bounce that we had. From that point through to the recovery was 65 days. So the last little bounce that we had this time was right over here. And if we do 65 days to the recovery, that would be way out over here in early February. Now, one thing to note is if you measure, I was doing this the other day, measure from that sell-off point to this first trap move, that's 28 days. And then if you measure from the trap move to the eventual bottom, that's 35 days. So a little bit more symmetry there. So if I go over here, I believe this was shorter. Yeah, 23 days. So there's also reason to believe this is unfolding slightly faster than the summer sell-off. So perhaps the eventual bottom is more like 30 days from that point, which is somewhere over here, maybe late January. So roughly halfway through the pattern, maybe I was saying 2/3 of the way through the pattern, but maybe closer to halfway through whatever this pattern is. Now, the other thing to keep in mind is, of course, I was looking for the same patterns to unfold in September. And what I don't know, what none of us know, I don't think, is did some whale step in here and mess with the plans, or was this purely a reaccumulation? So this is a lot of times these reaccumulations are kind of accelerated. So this might have been an accelerated reaccumulation. Remember, this was China reban. This is the reban of all this price action over here was China rebanning and a bunch of FUD. What got me on this one was the FUD around, okay, is Hong Kong going to follow suit and cause problems for Tether? That was my biggest concern here. But this pattern here didn't seemingly finish. It seemingly snapped out of the pattern sooner because we never put in a real trap here, sooner than you would expect. However, in hindsight, this was really our selling climax. This might have been more the trap, and this was the second half of it, but it actually just came in a lot lower for some reason. So that also is something to consider there. But nonetheless, we snapped out of that without any clear, the pattern wasn't as clear for a reaccumulation pattern, but nonetheless, this portion of it appeared to have snapped out a little bit early. So what I'm continually on the look for is over here, do we get something more like this where we end up exiting the pattern earlier than we expect? It's going to be fascinating to watch. So I've got this watermark on here. And I use it more again for, my own personal entertainment. But I'm looking for, what am I looking for to be aggressively long again, right? I'm looking for confirmation of break to the upside. And so you see this descending wedge pattern that I've got kind of tentatively drawn in here. And you can see that the prior, pattern fits pretty well into this pattern. So we have a good indication that we're exiting this accumulation when we exit this downtrend. As you see here, we consolidated just below it and then blasted through it. So this was our opportunity to either you could have taken a speculative small position at the consolidation below, or wait until you get out here. Same thing would be true if we blast out here. Then we would have to reopen position somewhere up on the first consolidation outside of this pattern. But I'm really looking for above the 50 days. This right here felt a whole lot better to me in early October. Once we broke out, we got it back above the 50, consolidated right above it, and that gave me a lot of high confidence entries for this trading range up here. Same thing would be true here. As you can see, the 50 is coming down pretty aggressively, just like this pattern here. Another thing I say is, I feel pretty adept at managing around these Wyckoff patterns, because if this is accumulation, I'll get my total confirmation that this was accumulation and that we've regained momentum when we retake the 50-day moving average. So as you consolidate right here, right around it, and then make your continuation upward, that to me is confirmation. So that would give me a lot of confidence in holding my trades and then trying to push those, waiting for so if you draw this parabolic trend line, you can sell a little bit there, but I'm waiting for the next higher low to be put in, and then I'm going to draw my next trend line off of that higher low, and then I'm going to know when we're getting into trouble. Like over here, this particular move, we knew that we were starting to lose some momentum right as this happened, because we had this breakout trend line to work with, and actually it was perfect. I remember this actually perfectly touched that right there. But nonetheless, we'll continue to watch. If we break out early, great. We know what to do. We'll watch our 50-day moving average, and we'll watch this descending wedge pattern that we've been putting in. A break to the upside of this wedge pattern, and especially when we retake the 50-day, will give us a high confidence that we've exited a pattern and that we're entering a markup phase, which we're going to want to be trading that markup phase. All right. Good evening, says Marcel. Let's take a look at comments here. Manipulation, laughing face. Well, I don't know if you're laughing at me for saying that manipulation, but so, I don't think anybody can deny, I don't know how you etch a sketch, draw these patterns on a chart, but somehow, it could be collective human psychology, I suppose. This is just way too accurate. It's both of these, this Wyckoff distribution and this accumulation, and this whole pattern, this distribution, and this accumulation, They are just way too close. And this was Wyckoff distribution schematic 2. This was Wyckoff distribution schematic 1, Wyckoff accumulation schematic 1, and potentially Wyckoff accumulation schematic 2. If this ends up doing what Wyckoff accumulation schematic 2 says it's going to do, right, and doesn't give us like a bigger spring level, it just kind of it really just holds up this higher level here and then exits the pattern off of that. We literally had a Wyckoff accumulation, a distribution 1, like to the T, exactly as the schematic says it should play out, and then a 1 almost to the T, exactly as the schematic said it should play out, and then a 2 to the T, and then a 2 accumulation to the T. If we get that repetition of patterns is just, I don't know how you do not conclude that there's not some sort of manipulation in the market. And maybe it's more collective psychology, and maybe it's just more the collective understanding of some larger players in the market that are helping. They're simply not buying up here because they know it's about to turn around. There's lots of potential explanations for it, but nonetheless, it's remarkable. These patterns have played out remarkably. So, all right. Big money less afraid. Retail money is more afraid. Yeah, I would say so. Like I don't. Well, it's weird to me that anybody's afraid. Like I can't. I'm not understanding the fear in the market at all. Like, hello. I guess I understand it for people that joined kind of late and bought at like 60,000 or something to keep. If you're new to the game and you're chasing price and you're buying up at the top and you're fearful because you're down on your hold, then yeah, maybe I can understand that. What I don't understand is when you look at the broad trend. I mean, we're clearly in an uptrend still, and it's been a pretty volatile period through here, but it's broadly and definitely in an uptrend, right? And so it depends on your time frame and what kind of time frame you're trading. Now, if you're trading a shorter time frame, when this 50 turned down like that, you might consider this an intermediate, downtrend clearly, and that's tradable for sure if you're trading on those type of time frames. But a year ago, was this January something, we were still well down from where we are today, right? So all this back and forth price action, we're still well up. And 2 years ago, we're way up from 2 years ago. What was January 2020? Yeah, $7,000. So it's beating the market. I just did a recent video, just a recap of like my recommendations from last year, and you can see that even just holding Bitcoin from January 1st to today beat the S&P 500. So it's not like you're not getting any returns in this asset. So I don't know where the fear exactly is coming from. But that's a good point. Good evening. ETH getting a bid as we speak. Let's go flip over and take a look at Ethereum. I did say I'd look at that today. ETH is, let me flip over my phone so it's buzzing at me. Yeah, so ETH, look at this 200-day moving average for Ethereum. It's just up and to the right, man. That is some strength right there. So the last time we had a chance to accumulate so I'm going to start highlighting this. If you want to avoid chasing momentum and buying the tops and getting whipsawed around by the market, but you don't want to be an active trader who's doing trend lines and Heath levels and looking at supply zones and all this other stuff that we do, right? And volume and blah blah blah. If you just want to keep it real simple and you want to trade this is what I'm highlighting here. Very simple trading system. When the 200-day moving average, let's put this on your chart. How you can do that is go over here to indicators and type in moving, and it's just the moving average is all it is. And once you get this indicator, you go to settings, and I peg this thing to the 1 day. So I say instead of follow whatever the chart time frame I happen to be looking at, I will always want it to be the 200-day, so length 200 1 day moving average based on the closing price only, right? So I want the close of basically all this line is a plotted point for the average price. So you take the last 200 days closing price of the asset and plot a dot on this, and that's all it is. It's a plotted point of the last 200-day average price. So the last average price of Ethereum over the past 200 days is $3,394. Now, a very simple way to accumulate crypto assets is when you're in an uptrend. So when this is trending upward, anytime the asset dips below the 200-day moving average, you can go ahead and purchase. And the reason I say not when it's trending downward is because when it starts trending downward, we want to discontinue our. So here's an example. I'm just going to go back here. Just kind of back test this, right? So you would have been dollar cost averaging through here and through here, but you're going to cool your jets. When this thing goes south, you're going to quit DCA. You're going to find something else to DCA into, or you're going to put your money into stable coins and let that collect. And then when this starts to turn upward, then you start to DCA back in. Now, obviously, the one gap in this is like down here would have been a great opportunity to DCA in. So what do we do about that? Those type of things. You're going to probably want to, right here. So this goes back upwards, right? It starts to slope upwards. It's no longer in a downtrend. It's sideways. So that's your DCA. You DCA like crazy right there. So you've been saving money in stable coins this whole time. You get this little bit of an uptrend. So you're starting to get, basically, it's putting in a bottom. And so the market shows you it's putting in a bottom. Let me go to the log just so you can see this, use broader strokes here. Right, so you're going to avoid DCAing this whole time as it's coming down. You're going to keep your money in stable coins or something else that's more stable, and you're going to be collecting interest on those stable coins. Now, when the market shows some strength, it's going to drag that 200-day moving average back up. That means you now have momentum. You've got buyers now stepping in. So now we've got some buyers starting to step in. So what we're going to do is we're going to continue our DCA through here now that we know that we're getting closer to a bottom. And then you're going to suspend it. And then the market's going to turn upward, and the next time you DCA is way the heck over here. That's just a DCA strategy. Now, as simple as it can be, right? DCA below the 200. That keeps you basically from buying at these tops, right? But you're going to want to take advantage of these tops. And so one of the other things we're going to start to talk about is using just a simple 50-day moving average. When you lose the 50-day moving average, you can sell a little bit. And you can buy that back when it recrosses the 50-day. So this one's tough. We're going to have some rules around, like when it drops below, way below the 50 like that, you're going to hold off on selling until it comes back closer to it. So we'll have some rules around that. But sell, buy back, that would have been a break-even trade. And then you would have sold over here again a little bit, percentage, and you're just waiting to buy that back. So that trading strategy, that will help, sell, buy back. You get the idea. If you want to layer that in, that's an optional second phase. Like for people that just want to just know when to DCA in, there's another, I've showed this before looking to Bitcoin. It's basically a simple way of doing that. And I kind of recommend if you're just going to do just the DCA thing, this is the 200-week moving average. And basically as price approaches that, you DCA in more. This one's even simpler. When the dots are blue, you DCA. When the dots are green, yellow, and red, you suspend your dollar cost averaging at these, colorations, and then you sell. You start to trim at the yellow and orange and red, right? So like you would have sold a little bit in March, but not a bunch, and you would start to slowly DCA back in over here and aggressively do so the closer this gets to this line. Kind of a similar idea, but it keeps people from DCAing out of from putting money in at the top. Rather, they can be collecting funds, compounding in a stable coin or something like that, and then waiting for the buying opportunity, which would have been like right here was the last time you had a chance to buy. I highlight all that. Ethereum is getting a bid here. I highlight all that because you look at where we're at. It's not really a great time to be buying spot because it's still pretty elevated, and it could very well still have a decent dip below the 200 or at the 200 even. The other thing too is you want this 50 is now turned downward pretty significantly. So if you would have sold the 50 over here somewhere, if you would have got as close as you could to the 50 and then bought back right here, that'd have been a great trade. Same thing here. Right now you would have sold somewhere in here and you're waiting to buy back in. The 50 is going to continue to get pulled down, and then eventually prices are going to cross it, and that's going to be another signal that we've regained momentum. But as far as Ethereum goes, at least it's getting a bid. Let's look at the ETH BTC chart. It's a long way of saying, to me, you're kind of in this no man's range, and I'd be careful buying in right here. It is a monthly support level, though. Like if you're doing structured trades, now take all this other stuff away. Generally speaking, I look at the 200-day moving average. If it's going this direction, we're in an uptrend. I just leave it as simple as that. Like that confirms. This totally confirms we're in an uptrend. Now I'm going to buy support in an uptrend. So if you're being more technical about it, I think this is a monthly level. It's a monthly. No, I don't know where I got that level from. A weekly level, maybe? Nope, I don't know where I pulled that level from. Usually monthlies are green on here. That shouldn't be green. It should just be some other, that should be gray color. And these should be gray. That's messing me up. Good thing I checked that. All right, so that's just a swing high. So I just had marked on here a swing high real fast. So what you're gonna do is you're gonna buy in a strong support and an uptrend. You're in an uptrend, you're gonna find the support levels you think are the most impactful, and you can attempt to buy into those, and that would have been a decent little bounce. At this point though, it's still a small bounce. This is where trend lines are handy. It's a kind of a more granular look to when you regain momentum. So these moving averages, you could do like a 20-day moving average, but I found that to be very, very noisy. So I'm gonna discontinue using the 20-day, because in testing it and looking at it closely, it's just way too much noise. The 50-day creates enough noise as it is. You see this price action kind of ping-ponging around it, that we're gonna have to put a structure around how do you deal with when prices just basically the structure is you just cool your jets until it picks a direction. But the 20 days is way too noisy, so that's where I use trend lines, right? In lieu of something like a lower moving average or an EMA, I just use trend lines. And trend lines tell me when momentum's changing. I did this whole thread yesterday about how, more or less what I look at when we break a level, when we break a trend line level, and I should have highlighted on Bitcoin here, this bottom ETH level was kind of maybe even more important. I realized after I did the thread, but I just threw it together. I got a super chat, thank you. Let's finish this talk on Ethereum here, and then we'll get out. Let me get this comment out of the way. But you can see kind of how I navigate. I did this thread yesterday. More or less how I look at when you get a breakout of this level, what I'm looking for is what were the most significant horizontal levels around that level, and I'm waiting for a throwback to those levels, right? And then I'm seeing what price does around those levels. And, below... Then it gives you some really good trading insight. This is showing you where the market is putting in a floor. You can see these closes all right here, right above. This close over here. It's putting in these higher closes consistently on the daily over here. So, just some interesting stuff. With those are that's the level it broke out at over here. The top level and the bottom level is, and really, like I said, probably this daily level below. That range is where it broke out. It's kind of more important than maybe the specific level, but. Then it came back into this bottom. When it touched that trend line and bounced the first time, it bounced on this ETH level. So that's the one I start watching real closely. Anyway, let's go back to our Ethereum chart. So same thing would be true here. Right? If we were to break on a 4-hour, much in the 4-hour here, I got this this downtrend trend line here, and I'm going to watch to see what level we break. When this breaks through, you can throw a daily level on here. I'm going to see what the daily level is, whatever the closest daily level is. And these are, what is going on with this Gemini feed, man? These shouldn't be gapping like this. We got some gaps. I'd have to find a better feed, but let's just, for the sake of, I would not be charting on this with these gaps. I would go find a better chart, but let's say that's the level, right? So say you consolidate underneath that and then snap through. What I'm waiting for is I'm waiting to see if the market's going to confirm that that's going to hold on a throwback to that, right? And then that's the level that I'm going to start to watch. We have this weekly resistance up here. I'm not going to overthink that, but likely that's an area to look with the initial rejection. Once you get that initial rejection, and once you show you're going to hold this is now your range, so you can do some range trading. You can take some scalps with the initial take profit of there. But once you break that, that's where I'm going to be looking to let it run, right? But you get the 50-day moving average coming in, a lot of confluence of stuff. So probably if you were to get a break right now on Ethereum, it would be pretty nice, because you're going to come into both the 50-day moving average and this weekly resistance and see how that reacts on the resistance side. See if this level is going to hold, or if it's going to want to come back further on this trend line to like a daily, ETH level down, or level down here of some type. And that'll give you your range. That'll give you your trading range on the post breakout side. And once you snap either direction of that, you have some confidence in that direction. All right. Let's take a look at this super chat. How's this show up on my screen here? Have you checked out ECC Empire Capital? They're making major moves with bridging DeFi and CeFi. So far, the biggest gainer of 2022. Let's go take a look at ECC. Is it a stonk that also is... go look at CoinMarketCap real fast. Is this a crypto? Is Empire Capital a crypto, or is it? No, I haven't looked into it. ECC. Does it here? Am I at the right thing here? ECC is breaking new ground to fight privacy, security, and autonomy. ECC believes in a future decentralized not only ensures financial autonomy, but the catalyst for users to regain. So this is a big topic. This is something that, you know, last year we kind of identified NFTs. I was thinking more on the gaming side, but obviously the JPEG craze took over. I still don't understand the JPEG craze, but I get like gaming NFTs and property and things like that. But to this end, easy to develop novel protocol to overlays existing node. Is this the right one? First, microservices, users in control, not corporations. But this is a theme that I think is going to be bigger, is self-sovereignty and of identity. So being able to actually control your identity with identity theft and all the different things going on out in the world, being able to control and have ownership of your identity as opposed to some central data point for that. I hope I'm at the right ECC. It's ECC Empire Capital, so I got the wrong ECC here. ECC Empire Capital token. This one? Okay. Oh, there you go. That one looks like it's up. Yeah. It's the biggest gainer of the year, up 138%, 3 months. Well, I just lost power, guys. So my backup generator is about to kick on, but I just lost the screen because I lost power. Nope. Hold on. Sorry about that. That was a heater that killed the switch. Alright, can y'all still see my screen? I hope so. There we go. Let's get this back off the screen here. Alright. Yeah, let's do an Empire Capital quick review here. Let's do a quick recap. Let's go back to put this back up on the screen. Wrong token. All right, BTCD making marginally lower low. So the only problem with this one is you're going to be chasing momentum a little bit. Now, from a project perspective, let's take a look. It's 31.50. I have not looked at this at all. I don't remember hearing about it. Empire Dex is a multi-chain DEX ecosystem. So they have a DEX, okay. Launched in December 2021, so it just recently launched. Team based in Australia, Empire Capital is a DeFi 3.0 high yield farming, staking, smart contract. So this is another area that we've been looking to ramp up our understanding of is and the ability to take advantage of. If we're going to be in a sideways market this year, yield farming is an area that I want to be more involved in throughout this year. The thing I like about yield farming is you do it responsibly and you do it, but you take advantage of it. It gives you a nice baseline in returns. And so it gives you obviously the ability to kind of dynamically dollar cost average in when things are down. It will, I mean, you have, if things do go parabolic and you're locked in and liquidity pairs, you will have some losses there, but you'll stay in maybe only partial losses. You still have some exposure to that upside while giving yourself a nice down baseline for that capital you have at work there. So if they're doing some yield farming capabilities, but Empire tokens up, blah, 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 blah. High yield smart contract, cross-chain decentralization exchange, Empire Dex. Empire Dex is multi-chain. So is this the right one? You see Capital is making major moves with bridging DeFi and CeFi. There's no farming. You just hold the token and it generates yield for your wallet. Okay, so it just kind of dynamically does it. So this looks like the right one. Let's go to ecccapital.com. Let's take a look at their website. Empire Capital token. Empire Dex is a multi-chain DEX ecosystem, full suite of integration, developer services, integrated in Empire Dex. Empire Dex tokens. Yes, I have heard of this. So literally, my chiropractor sent me a text message. Said, "Have you heard of this thing? Gives like 0.5%." There's, I don't know if it's this one. Hold on, what did he send me? I gotta find this. I get people. This is what's great about being known as like a crypto guy. Is I get people sending me like ideas all the time. They're like, "Have you heard of this?" I'm like, the odds are, out of the tens of thousands of projects out there, I haven't. But it's called the Hyper Community, is what he sent me. A bunch of people were sending him this. It's another one. It's another one like this. Apparently, I'm getting a little concerned. You know, there's almost too many of these. But Hyper Community. Let's take a look at these two side. But this is what my oh no, I don't want to be going to something that has a hypercommunity.link. Anyway, thehypercommunity.net. There you go. There's another one similar to what you're saying, but I don't know. I'd have to dig in more to the difference here. But these are starting to become more popular. Let's focus on your Empire. So you can buy it on PancakeSwap. So that's cool. There's a lot of stuff on PancakeSwap, man. That seems to be PancakeSwap is like the center of the universe for yield farming right now. View on DEX tools. So it's just a token that you buy that provides high yield. So how exactly is it providing? New buyer 9%, 1% burn, DeFi 3.0 yield, ECC holders, ECC treasury, sell 4% marketing, auto LP, invest in other yield generating assets as part of the treasury. So it's kind of like automated investment tool. ECC addresses DeFi 2.0 challenges by creating actively managed and diversified treasury fund of yield-generating tokens that also tap into our Empire DEX USDC revenue sharing model. The profits in the fund are used to buy ECC, thereby. Okay, well, I don't have a strong opinion on this as of just yet. What I'm going to have to do, and thanks for the super chat, I will add this to my. I'm gonna start making like what I think are gonna be about 5-minute videos of here's what this project is, who founded it, here's what it is, and here's some very quick, long-term technical analysis. And I'm gonna be, for those videos, I'm just gonna be using the 50 and the 200. We're in an uptrend or we're in a downtrend. In this case, this one's probably very far detached from the 200-day moving average. So from a DCA long-term position, it's probably not a good time to buy, but you can probably trade it. If I can go find the right token out here, I don't know if it's got a. Let's just go back to, if it's Empire Capital. I can see if I can pull up a trading view chart here and get. No, there's no trading view chart. There's no because it's just Binance Smart Chain PancakeSwap. There's no live data feed on it just yet. Okay. Main thing is obviously you're going to be really far detached from all your moving averages and everything else. That's okay for these kind of parabolic crypto assets for you to actively trade them. They can be as far detached as anything. The RSI can be overbought. None of that matters as long as you're using very good risk management and you're trading. Mostly patterns work the best on these. Let's go to a short term. So you're going to be looking for some sort of pattern to develop. So a bull flag, a pennant, or like this. In this case, it's clearly just in a very strong uptrend channel. I mean, I don't have a chart to show you, but and this is going to be putting in a really strong uptrend channel. Likely, what you're going to want to do is you're going to want it for it to cool down and consolidate, and that'll give you some more patterns to work with, because this channel's formed on like a 1 or 2 day. This thing just like literally took off, I guess, from a tenth of a penny, tenth of a cent. Right? Am I reading that right? Or is that 1 cent? That's 1 cent. I think it took off from 1 cent to, is that right? 8 cents? So yeah, and these being such small, what's the market cap? 8 million? Am I reading that right? Is that possible? These are really small market caps. Yeah, so when you're this early in, like if you just really like it, buy a little bit, right? I mean, it's an $8 million market cap. If you just really like it and you think it's good, you can just like, these type of speculative plays, throw 1% or whatever at if you're really excited about it. Like for not financial advice, but if I find something like this and it's already up 150% or something like that, I don't really care, because if I'm just going to hold it in this little moon bag for a little while, I'll put the small portion of my portfolio on it, and just have a handful of these tokens and see what they do. But yeah, you're not going to. This is going to be chasing big time, but. It's still, it is an $8 million market cap. So these really parabolic assets, they start like this, right? They go from basically nothing to 200% gain, and they just keep trucking for a while. But again, if you're going to be, prudent about it, you're probably still going to wait for it to at least consolidate. It doesn't have to sell off and come back to these lower levels. It may never return to these levels if it's really quality, project. It'll just consolidate and give you an opportunity to accumulate in a consolidation phase. So something to definitely keep an eye on. I don't have a chart for you to work with. Sorry. I will need to do some more research to see if there's any obvious red flags on this. If this is more of a potential rug pull or something else like that. I don't have a good read on it. It's going to take me a while to get through. Do they have a white paper? Do they have? Let's see what they got here. Docs. It's intrigued my interest though. This is exactly what I've been looking for. I've been looking for some really good early stage DEXs to get in to start yield farming or things like DEXs, projects like that are AMMs, anything related to an AMM space where I can provide liquidity to and get some yield back. That's what I'm looking for. If we're going to go sideways for a little while here. Now, I do think we're going to get some interesting price action. We're going to eventually break the volatility that we've had at some point. But as we saw last year, we could just mostly consolidate through this year and a lot of crypto as well. So yield farming is a great way to give you a nice baseline of return if the market's not going to be exciting for trading. So I hope that ECC is a gem, says somebody on here. Well then, let's get on this one. Let's do our research. Thanks for bringing it up. I appreciate you bringing that to the attention of the community. And this is kind of exciting that you brought this up because I've been looking for some good things to research. Here's the white paper for some yield farming. I'll go through is this an actual white paper or is this like a marketing slick? It's more of a this is not a white paper. It says it's a white paper. This is not a white paper. This is a marketing slick. I'll go through what data they have, and I'll see if I find any obvious issues, though. I want to know, like, the mechanics of how it's working. So if you guys have any information on the mechanics of how this, or this other one, the hyper community, I got to go find the hyper community one. This is the one that literally my... hyper community. Like I said, my chiropractor sent me a message saying, "Hey, have you heard of this? Hyper crypto." Man, this sounds a little rug pully to me. Empire Capital sounds a little more professional than hyper crypto. And it's not even on. It might be on CoinGecko. No, it's not even here. All right, I don't know. Maybe it's under something like whatever. It doesn't matter. All right. Well, thank you for bringing that to our attention. I don't have any. I don't know enough about it to give you any good feedback at this point. Oh, here we go. Buy LP. So, are they dynamically buying these pairs? So it sounds to me like what they're doing is they're just yield farming on PancakeSwap for you, more or less. ECC. Let me just read this together. Each ECC token represents a share of the profits of Empire Capital. As the profits accumulate, Empire Capital Treasury, they're bridged and invested in a yield. Do I still have this comment up on the screen? Okay, I'm getting a million comments, so somebody's getting all excited about something. Auto compounding vaults, yield aggregator. So yeah, so they're it's a yield aggregator. Okay, cool. Yeah, that sounds like a good one to take a look at. What is this BS? You let someone contribute nothing. We'll talk about that later, man. Yeah, we'll talk about that later on Discord. You're getting muted. We'll reduce the mute. I'll go work with them on that. But just keep your comments respectful. I mean, there was some disrespectful comments there, so let's try to rein that in, and then we'll get you off of mute here in a bit, but. I do agree with why you were muted, to be honest, because it's other people are doing it too, so it's not fair to pick on you per se, but it's in our CTT community, guys. I don't censor anybody. Like in the admin channel. I'm the only time I tell people to moderate anything is when people are being disrespectful of others. That's it, right? You can say you disagree with somebody, and you can give the reasons why. All I ask is that you have data, right? Just show us the data that shows that this is why you disagree with somebody. Personal attacks, calling them names, saying that they're frauds or whatever else, it doesn't do anybody any good, and that's not respectful, behavior. So let's keep it respectful. That's all I ask. I'm not going to censor anything you say, any opinion, and you don't even have to have data to share your opinion. As long as you say clearly, this is my opinion. There's no necessarily any data behind it. This is just how I feel about this, matter or whatever. As long as you're respectful, we all need to respect each other's opinions as well. Like I don't have any problem with people having their own opinion. If you're going to make a claim about something, I want the data, right? If you're going to say Bitcoin is going to $400,000 by March, great. Where's the data? Show me the data that demonstrates clearly you have a reasons for thinking that thesis, whatever it is, right? And as long as you have data that backs up your thesis, then that's valid information. If it's your opinion that people who think that Bitcoin's going to $400,000 by March are crazy, you can also say that. I think people who think Bitcoin's going to $400,000 is crazy, but that's just my opinion. As long as you don't attack somebody personally and say, and you, sir, are an absolute idiot and a fraud for saying that. That's where you cross the line. You can say respectfully, it's my opinion that's not going to happen. That's your opinion. All right. But let's just try to clean that up a little bit. That's all I ask. All right. I think there are thousands of people that use their debit cards, day, coffee, Uber Eats, online shopping. Something costs $2, charges $3, 20 cents goes to buy the ETH token. Yeah, I mean, if they're out there just a yield farming aggregator, holders get reflected. Yeah. Cool. ECC is CertiK audited with offices in New Zealand. Great. Fire. They're a super strong team based out of New Zealand. Okay. Do we got? Look at this stupid spammers in here. Okay. Maybe 50% dips and long-term consolidation of the new bear markets now that institutional investors are prevalent. Yeah, I mean, just look at this. Like, you can kind of see shades of this happening. Like, I pull up the Qs, right, which is just, kind of more or less the NASDAQ, but it's the major tech companies, right? You pull that up, look at the long-term chart on the Qs. Why do I have people freaking out? Hold on, guys. All right, I got somebody here to do some work. Hopefully my wife's got that. All right, but yeah, you look at this. This is the long-term chart on the tech indices, and you see you got this blow-off top, and this is a broad market blow-off top, right? So they do exist clearly, and then you go into this, but then you have this phase of a period of up, and then some solid, sell-off, and then it's just this relentless up with some sell-offs, up. Sell-off, up, sell-off, and then clearly you're going to have a sell-off at some point. It's not going to keep going up like that, but that's the trajectory. It's up with sell-offs, up with sell-offs, up with sell-offs, and so frankly, on a weekly, this is looking a little bit parabolic to me. I don't know about you guys, but this looks kind of parabolic. But when you print too much money, markets melt up, not down. They don't sell off because there's nowhere for that money to go on the downside. But this is how Bitcoin could end up looking, right? Is this, we had this 2017, whatever, type of thing over here on Bitcoin. This is like 2017 era Bitcoin, right? And then before that, it was really volatile. And then you get this, I don't know. I would not be shocked if Bitcoin put in a big move like this next, right? Just like the Qs did. The Qs went from 165. This is a major, to 400 in, what was that? March, April, May, like a year and a half, right? So, yeah, I think Bitcoin's going to just continue to look something like that, in my opinion, that it's going to be this kind of relentless march upward with a bunch of pullbacks. And kind of crypto at broad, I think, the total market cap's a really good place to look for a proxy on what that's doing. Let's go look at the total market cap. Where's my total? There's total. Right. As you can see here, I've got a couple times now we've tried to roll over. The other thing is to just consider, with as much consolidation as we've had, we've put in a lot of support. So we're not going to get the same, if we do have a bear market, just also consider just how markets work and just the supply, where people are holding at what price they're holding at, and who's going to be willing to sell at certain prices. So when you get a blow off top like this, there's a very large area of buyers that came in up here and buyers that were holding down here. These buyers that were been holding since way over here are willing to sell all the way down here. Then they're not so willing to sell at a loss, right? But they're going to be in profit all the way down. So you got a lot of willing sellers. Up here, you don't have a lot of willing buyers because it's too far detached. And so you get this dichotomy where you have the market is going to put in a floor because people that bought way over here, as they watch this go way up and then come back down, they're going to be willing to step in and buy again. And then there's just this big gap that gets put in and you get range bound in those areas. But there's just not, a big move like this. There's just not a lot of supply above that. So what happens is anytime price comes up and starts to approach that area, it gets sold into heavily from people that were buying, obviously lower. So, and there's just less and less buyers. But when you have something like this, like a longer range where there's a lot of buyers, it's really hard once you kind of put in that baseline, unless you have a fundamental change like this baseline here, that baseline there, and now we're putting in right. So you see how price can quickly leave those areas once you have buyers that really just put in a big floor there. So what you can kind of think of is what's going on here. You see that long-term accumulation there, and then the long-term accumulation here. We're putting in this whole range is kind of going to be like another green box, right? And at some point, you're going to leave that green box and make another big run, and you're going to have lots of supply, lots of support that's built up in this area. And it's another way of saying that your downside is very muted, because if you were to lose this area, you've just got too many people willing to buy. People have been buying and buying and buying at this price range for so long that it's going to be very hard to get to the bottom of this. So even if you were to come to the bottom of this, range, that would be a pretty big haircut. A lot of people will lose a lot of money, but the sell-off is very muted compared to a sell-off like this. So from this point, when you have this parabolic move, you can get these 80-something% down. It's 80% down on the total crypto market cap. But your downside here is just a lot more limited. That's like 60%. I guess it's still pretty bad, but you're not going to get, a bear market from where we're at right now to the worst case kind of scenarios, unless something drastically changes with the crypto market. You're talking 40% down. So, long way of saying that a bear market, if we do enter a bear market here and we just quit, we don't put in a new high for a while, we have a pretty limited downside. I don't see us. There's just too many buyers that are going to step in along the way here. So, what was the question here? 50% drop. Yeah, exactly. So if you look at exactly what I just 50% drops, long-term consolidations. This is, that would give you a 60% drop, something like that from there, and that was about a 50%. Yeah. Now those are two quick pullbacks in very quick succession like that. Normally, when you have that much consolidation, your next move out is more sustained, right? So if we were to get another, we've already had several pullbacks here. If we get another pullback to this trend line or something else, the next move out will be more of a sustained move, most likely. Grateful to Quinn for the invite. Thanks, Brandon. You're welcome, Sam. Hey, Bradley, nice to have you. Can you guys hear the dogs in the background? I've got somebody here doing spraying for bugs, apparently, and they're just going crazy. I don't think Miles did it for a newsletter. It's just that when Bitcoin didn't hit, 400,000 by the end of the year and it wasn't in profit, then he found something productive to go do, and he had a bunch of followers, so he started a newsletter. All right, and that's his prerogative. He has every right to do that. All right, ETH BTC is testing breakout support now where it broke the trend line. Looks like a good entry on ETH BTC based on what you said earlier in your tweet earlier today. ETH BTC is testing. Looks like a good entry. Based on it coming back to support? Yeah, let's see here. Where's my ETH BTC chart? Okay, so the comment is testing breakout support now. ETH BTC. Breakout support now. So it broke out right there. So the closest level is this weekly. So if you see, I've got that marked on my chart, but it's not exactly where it broke out. So this daily right here is these levels a little bit closer. What's interesting, yeah, there's not going to be, I have to go the way down to the 4 hour here. Yeah, look at this though. Interestingly enough, I just want to highlight something. You see the price gapped a little bit here on this breakout? So it actually never came back. It's never come back to fully test the exact breakout area, right? It just broke out and left. So you got a quick pullback right here into the range, and you can extend this all the way back over here. You'll find, but it never came back all the way. But you know, that's okay. We're putting in a new pattern over here, so that's fine. So now you've got this kind of is our breakout level. Yeah, so good comment, because it is breaking this. So you're putting in this kind of pennant formation over here, right? And you're breaking the upside of it. The problem is, though, you have this resistance right up here, but you know, it depends on how active of a trader you are. Everything's lined up for you, right? You've 200-day moving average is moving up, 50-day moving average is moving up. Came back into the 50, touched it. Now the 50 and the 200 I use less on like these pairs charts. I don't really typically ever use this, but it is demonstrate momentum. So let's leave the 200 on here, right? Clearly, Ethereum is gaining versus Bitcoin. You've got this resistance right here. If I was actively trading this pair right now, yeah, you see this little bit of consolidation you put in here? What I would be waiting for is a pullback to this block right here. So you see the 4 hour closed a bunch all the way back over here, right at that level. So post breakout, I'd wait to see if I could get a pullback right here, and I would buy some Ethereum versus Bitcoin, and I would put my stop pretty quickly below right here. So that's a nice little, you know, small area, a window. I'm gonna say the odds are that you actually get a touch of this level is probably pretty low because of the nature of this, but you just never know. But yeah, so a 0.0, so I'd buy Ethereum with Bitcoin at 0.08108, right? So you would add to your Ethereum position, and your initial take profit would be that. I had this resistance over here as a swing high. That swing high right there. But that's not a valid actionable level now. That price action is so far back, and we broached that price action. We're going to look for new levels for our initial take profit, which I think your initial take profit is going to be this right here, because you could be range bound after this. And that's the other thing too that can happen, is we can just kind of range right here and consolidate for it makes a decision. But per this, yeah, if you're talking about, I guess on a shorter time frame, maybe this is what you're talking about, but you had this little bit of consolidation, and you broke out right at that level, that interesting level, that 4 hour block that we talked about. That's where you broke the trend line, is also at that 4 hour block. But you can see it started right over here, and then it's put in. So actually, if I was more accurate with my trend line on the 4 hour, you consolidated right above that. So that would have been a nice breakout entry right there. So yeah, that block that it put in when you broke that, you know, and it's off and running. A pullback to that's going to give you a really high. So if you're taking the breakout of all this, right? Odds are, so this is a nice little bit of consolidation that you could take a breakout of. Odds are the market's going to come back to test that level. If the market were to test that level, that's going to be the best possible entry for you, because you've got all the confirmation of the market is wanting to move in that direction. You've got momentum on your side with this move. And if you were to come back to ping that level, then you have a really good risk management level. You know that if you lose, I mean, you could even put stop as tight as that to give you a bigger position size and a bounce or a die play, or you can put your stop here. Or if you really want to ride a longer trend, if you're trying to take this as a trend trade, put your stop all the way down here, because if it can come all the way back to this level and then bounce, right? But me personally, I would take a stab at an entry like this, and now that I'm thinking about it, I might actually go add some Ethereum just for this potential play. If we come back to that level right there, and then put a stop right under here, and then see if you can't push Ethereum out on a breakout of all this consolidation it's been doing versus Bitcoin. The only other problem with that is when I look at the Ethereum USD chart, so if this breaks out to the upside, it's interesting for a lot of reasons. If the ETH USD chart is showing some signs of exhaustion though, but it's still definitely in an uptrend, so I can't fault people for buying in an uptrend. When you buy an uptrend, and when you first establish an uptrend, right, and you buy early in that uptrend, so say like over here, we establish this uptrend. If you would have bought, say, that little move right there into support on this uptrend, I'm a lot of times more forgiving with these. When I very first have established an uptrend and I'm buying that first dip into support, I'll be a little bit more forgiving with those positions, because the odds are that you can still push this trade for quite a while still, hopefully, right? That's what you're hoping for. You don't ever know that, but you're hoping for that. Once you've had a prolonged move and you've had a longer term established uptrend, you're facing exhaustion. So you have to be a little bit more careful with your entries, because you could be buying on the turn, right? There's a good chance this asset is in distribution and is turning over. So that's the only caution, and that's another reason why if I were to take this trade, it's not a bad trade, the setup's there. I would keep a tighter stop under it and let myself have a larger position, rather than trying to do a wide stop and push it further, because I don't know how far I can push this trade really. It could very well get back up into this level, and then obviously your other take profits up here, and then you'd want to keep some of it on in case you break all of that and or re-enter on the other side of that as well. But what's interesting about this is I look at Bitcoin dominance. We're having to really analyze and gauge what is happening with the relationship of Bitcoin to the rest of the crypto landscape. As you can see here at the very end of the bull market and at the bear market, this is the levels that we reached on Bitcoin to the rest of the market, the Bitcoin dominance chart. And then this strength in Bitcoin was actually overall weakness in crypto, right? So it was just a big sell-off, big bear market in crypto, where Bitcoin sold off was held up better than other altcoins. So the question I have is, are we going to break back down to this level and have a very similar paradigm? If so, that's not looking great. It's more like a Bitcoin hit. Crypto might be hitting exhaustion in general, right? We've had a really big move in crypto. When people are looking for maybe more upside, that's a pretty big overall run, right? So just a couple of years ago, let's go back to the bottom of this, the sell-off here to the peak. And in crypto in total, we've put in 2,400% gains in 2 years, basically, or less, a little less than 2 years, from that capitulation low to that spike high. So, this is the same exact principle I just talked about earlier. We have to be more careful when we're trying to continue to push a trend that has played out this long, because there's a good chance we're entering exhaustion and we're at the phases of turning over largely of this trend. Now, given again the nature of how this trend very strongly broke out, very strong pullback, and then a very strong bounce and recovery, odds are now we simply enter kind of a boring consolidation period, right? Where the volatility slows back down, and so we'll see what happens. Watching all that very carefully. I think the main thing that gives me a lot of pause, and I'm really curious to see how this plays out, it's going to give us a lot of information about how the market's going to react in the future, is the Bitcoin accumulation pattern that we see here. And again, I want to highlight one more thing. We do not yet know for a certainty if this is a Bitcoin accumulation or a redistribution schematic. One more thing to keep in mind is that Bitcoin could be in redistribution itself. What gives me pause is the fact that Ethereum chart we just looked at, this is a distribution pattern. All this through here. So Ethereum is in distribution, and that's the one thing to keep in mind is Ethereum's in a distribution pattern. So it meets all of our criteria for uptrend and everything else, but this is where we have to start being very cautious. And you're going to lose. What happens is when you ride a trend like this for a long time, you buy support, you buy support, you buy, and it works a lot, right? You buy support, and you win a lot of trades, but you're going to kind of have to pay your dues on the turn. When the market starts to turn the other direction and you keep trying to buy support in an uptrend, eventually you're going to get caught on the turn and you're going to get stopped out, right? You're going to start to get stopped out as things turn over. The faster we can identify that we're turning over, the faster we can quit getting stopped out. But you're going to get some stops. You're going to get some stops trying to get the turn early. So like if you were a little bit early thinking this was the turn right here, and you get stopped out, maybe even here and get stopped out. But these are good opportunities to buy back. So this is now developed a new uptrend, and boom, all this winning you got to do this whole time. At some point, all that winning comes to an end, and you enter either a sideways market or a down market. So this is hopefully and apparently Bitcoin reaccumulation, in my opinion, given where Bitcoin dominance is in this kind of weak area. And what was the answer? The comment I was answering about was Ethereum. Anyway, you guys get the idea, right? So we have a lot of things that are kind of stacking up right now, and it's going to be interesting to see what happens. Maybe the most relevant thing that could happen is this is the best case scenario in my book is this is an accumulation and we get kind of a boring redistribution where we get a breakout, we get a nice move, hopefully more like this move than this move, but nonetheless we get a nice move, Bitcoin dominance bounces back a little bit, and then the whole market just kind of goes sideways, right? For a while and consolidates for a while. That would not be terrible because then the next move out can be a good sustained move. If we get a big move from here, it's not going to be sustainable. That's the other piece of it, which is fine for trading, but there's going to be a lot of people that get caught out by that unsustainable move. All right, well guys, I'm going to start to wrap up here. I'm going to throw some comments here. Thanks. Yep. Yeah, dogs are barking. Sorry. It's Doge signal. Pump it. They want Doge. Look at the 4 hours. I was looking at smaller triangle top, the big one. Yep. Do you think a long-term trend there could be a bounce back into BTC as ETH chart is showing exhaustion? Yes. I think what we're going to see here, this ETH BTC chart, you did set up a good trade. But remember, not all trades work. You can have the best setup in the world, and it can just go against you. The market's unpredictable. We have to line ourselves up on the side of probability. The probability is you've had all this consolidation, you broke to the upside, you came back, not quite to exactly the breakout levels of this, but you came close, and you put a new consolidation here. You said you're for the 4 hour, the lower time frame, and now you're breaking out of that consolidation. This is a fair entry. The probabilities are that you're right. It's like 60-40 that you're right, and you're going to go at least test these areas, if not break out on this chart. But there's that 40% chance that this is all just a fake out move to the upside and it goes the other direction. So that's okay. It's part of the game. That's why you have risk management and stop losses. If you get stopped out, you get stopped out. The risk to reward, it's more or less it's a good risk reward setup. It's a good setup. It's there, and just know that the probabilities are lower now that you're kind of potentially facing this exhaustion, as we see kind of signs of it in other places. So the odds are, this might be a 65% setup on a normal market, and maybe it's a 55% setup, chance of working out in your favor now, given all the potential exhaustion that we see. Any plan to exit spot on the next pump, or will you sit it out? I will be trimming. So I didn't trim. So I'll share this with you guys. The reason, as you guys know, I got out of all leverage up here when we lost this level, this ETH level right here, right? When we lost that level, I got out of all my leverage right there, and I've been out of leverage except for a couple of stabs. I ate a stop somewhere over here trying to buy the dip. We attempted to buy this bull flag right here. That's where I got stopped out. So I attempted to buy a breakout of some bull flag right around here. Didn't work. Got stopped out. and then we had like a profitable bounce. You know, I bought into support over this range right here, and then we sold basically over here when this rolled over, right? So stop loss, small win, but otherwise I've been out of leverage entirely. I didn't sell spot, although I wanted to, for two reasons. One, I had this 50-day. I wanted to sell spot coming into this 50-day on a test of the 50-day on a rollover, but I was out of town that week and didn't get a chance to really look at the data. And the data didn't seem to indicate we were going to have that much of a sell-off as we did, especially this week here. But this was the opportunity I should have sold spot. The other reason I didn't do it is we're coming into the end of the year, and for tax planning purposes, I didn't have a good plan. You know, I'd had to pay more taxes on that. That would have just ramped up my income tax, and I didn't have time to plan any sort of business expense offsets to at least partially offset the profit taking of that. So given that the fundamentals were not looking like it was going to sell off a whole lot, I actually thought it was going to come into the 120 and hold, is what I kind of thought. I was wrong. No, I didn't end up selling. So my next opportunity, now that I don't have that lingering, like I've got all of 2022 to plan what to do with those profits to see if I can't reinvest that in something that might be partially offsetting those capital gains, but that income tax, if it's shorter term, or capital gains as well, right? I'm sitting on stuff that's capital gains tax as well. But nonetheless, you get the idea. One of the big reasons I didn't sell is that I don't have that on my shoulders now. So the next big move that we get, I'm gonna be a lot more apt to get into some stable coins, and then I've got all year to do tax planning with those take profits. So yes, on the next big move up, if we were to get a new all-time high and look like we're starting to come into exhaustion at the 80s or something like that, then yes, as we roll over, I will be looking to get into some stable coins at least. All right, guys. I need to wrap up. Like I said, obviously there's noise in the background, and you guys are probably getting sick of being distracted by that. So take care, everybody. Thanks, everybody, for being here. Thanks, Edgar. Yeah, Jack, that's kind of what I think. I do think that we're going to have a rotation back into Bitcoin at some point. That's kind of that's what I'm seeing kind of happen. What's going on with these videos I've got? I'm recommending myself. I gotta go find Doge-wave here. All right, guys. You guys take care. If I put this on this other screen, it might behave better.